"We will see losses, no question about it." That is a quote from the CEO of Wells Fargo, one of the top 5 major banks in the US. He said that in regards to commercial real estate. As we all know, the economy is definitely shifting and going more towards a recessionary period. There has been slowdowns in the banking industry, which affects real estate, specifically, or first, commercial real estate. Will this go into more of the residential real estate and other sectors of the economy? Well, in today's video, I'm going to talk about that, the impending doom of commercial real estate these next few months in the US economy and how it affects residential real estate and other sectors of the economy. More and more banks are letting go of a lot of commercial real estate loans, and they're selling these loans at a loss. That's why you have a major CEO saying, hey, we're going to do these same things. We're going to start selling some of these assets that are not going to make us money for a loss in order to better prepare ourselves for the slowdown. So before we go any further, make sure you all comment down below your thoughts on commercial real estate, the housing market, the economy, and make sure you all subscribe to this channel for all of that information on the housing market, commercial real estate, and personal finance. So the commercial real estate slowdown has been showing signs since the banking collapse earlier this year, but now you're seeing more and more banks letting go of these loans at a losses, like I stated earlier. And so one bank that recently did this was a bank called PacWest. Now, PacWest just recently released around $2.4 billion worth of real estate loans at a loss of about 8%. So they sold them at 92 cents on the dollar. And we're hearing reports from other regional banks that are selling around this price range between 90 and 95 cents on the dollar. All right, so looking at this article by Financial Times, we see that HSBC USA is in the process of selling hundreds of millions of dollars of commercial real estate loans, potentially at a discount, as part of an effort to wind down direct lending to US property developers. HSBC is one of the top major banks in the world, and they are slowing down their lending to its American clients. And of course, they have a big division here in America. I believe they're based out of Europe, but even them, they are slowing down their lending specifically to commercial real estate to American developers. All right here you have other banks just making similar moves. You have Citizen that they are reducing their commercial property lending, more than double its stocks of loans available for sale to $1.8 billion during the first quarter. Like many other banks, it doesn't disclose what percentage of those loans are to commercial real estate borrowers. And then you have Customer Bancorp, based in suburban Philadelphia, cuts its commercial real estate lending by $25 million in the first quarter. It also recategorized 16 million of these loans as held for sale, up from zero in the previous quarter. You're having all these banks seeing what's happening in the economy, and they're slowing down their lending and actually selling off these loans to other investors. So what does that do to the housing market or the real estate game as a whole? Well, number one, developers are not able to lend out as much as they used to before, right? So you have these hotel developers, these office building developers that usually go to these regional banks for these loans, but now these banks are saying, hey, we have stricter rules now, and number two, we're not going to lend you this amount. You have to get the rest somewhere else, a private lender, or you just have to raise fund in order to be able to close on this property, in order to fund this project. And you see here that a lot of US hotel developers run out of cash as constructing lending dries up. So you see here that the largest lenders to hotels and commercial real estate markets have forced developers to postpone projects to find other creative ways to raise capital. Since March, 59 of the 98 total US hotel projects that broke ground or were in the pre-construction phase this year have been paused, according to previously unreported data shared by Reuters. And that's a big percentage of hotels that are currently paused. Maybe they're in the second phase of their construction and they need to draw out some more loans, and they started with this bank when interest rates were much lower, right? Now that interest rates are higher, these banks are a little bit more stricter. And so you have a lot of these, just what the banks are doing, offsetting these loans or offloading these loans, not being more strict, not lending as much to different real estate developers. And now real estate developers cannot build these certain buildings. And will it trickle into residential real estate? I know know too, lending is a little bit more stricter now with lending out to residential, right? Homeowners are not as qualified as they were maybe earlier last year because of higher interest rates. And so that's another thing to consider, because these laws don't only apply to commercial real estate, they do apply to residential. So a person who made a certain amount last year, they make that same amount or maybe a little bit higher this year, their pre-qualification amount to buying a regular residential home is completely different now. Now, how does this trickle down into other areas of the economy? So right here it says the slowdown of hotel developments will also limit profits of blue chip manufacturers like Caterpillar Inc., whose commercial real estate customers account for around 75% of construction sales. So you see, now that people are not able to build as much, or they have to take a pause from their project because they have to raise money or get money from another source other than the bank, now Caterpillar, these different construction companies or these material supply companies that a good majority of their business is from these big time commercial real estate, now they don't have as much business, right? Now they can't hire this many amount of people or other things like that. And so now people are losing jobs, right? And now they can't go to the store and buy as much. Now they can't do this or that. So you see the trickle down effect, right? Where everything started to slow down with the banking collapse of Silicon Valley Bank, right? And now we're seeing commercial real estate, and we're seeing the trickle down effects of all of this happening in the economy. Now, I do want to state, I guess, some positive news out of this. Now, one thing out of this that's positive is that we have lower prices. We have a slowdown in inflation, right? People are buying these commercial real estate loans, or these big time hedge funds are buying these commercial real estates at a discount. And in turn, there has been some slowdown in price increases in the housing market, in the residential housing market, because of stricter laws of governing or lending out loans, and because of higher interest rates, home prices are not jumping as high as they were previously. And on top of that, if you read right here, what happened with West Bank is that once they sold these loans, and even though they sold it at a loss, their shares of PacWest surged nearly 20% after it announced the transaction. This is positive news, right? Because people are seeing that these banks, since they don't want to collapse like other regional banks have, they're preparing, right? They're taking small losses in the beginning so they can better prepare when times get worse. And people like seeing that, right? And investors like seeing that. So they invest in companies like that can see ahead and prepare and are okay with taking a small loss in order not to take a greater loss in the future. Now, another thing I want to state is that not every type of commercial real estate is at threat. Right now, residential, even big apartment complexes are still pretty good. And another aspect of commercial real estate, or segment of commercial real estate that's great, is medical office buildings. It says medical offices face fewer headwinds because of the nature of their practice, right? So number one is that people have to be in person in order to meet with their doctor. Yes, there has been more of a virtual aspect to it, right? And so there's more of a hybrid version of the medical industry now, but there comes a time when you have to see your doctor, where you have to be in person, where they have to look at you, they have to perform some sort of surgery or procedure on you, and you have to go in person. Another compelling factor contributing to the resilience of medical offices is America's aging population. Around 10,000 baby boomers reach 65 in the US every day. The demand for medical services tend to increase as people grow older. And so baby boomers were one of the largest generations in America. And the older they get, the more medical treatments they need. And on top of that, people are living longer, right? Now people are living well into their 70s, even some into their 80s. And so people who are turning 60 or 65 years old, a lot of them still have 15, 20 years left. And so usually when you're older, you have more health complications. And so there's more of a demand. So this segment of commercial real estate is still there. It's still a hot demand. All right, let me know what your thoughts are on the commercial real estate game and everything that's happening around just real estate, the economy, and also your point of view or your opinion on what the Wells Fargo CEO said, saying that they will experience losses. I do like the candidness and the upfrontedness, if that's a word, of the CEO. I think over time, over these past few years, more and more CEOs are just being more real about their business and just what's going on in the economy. So let me know your thoughts down below. Make sure you like and subscribe, and I'll talk to you all later.